Hey folks, this is Sarabjit Johal from Fremont, California. Today is June 3rd, 2023. This is my weekly vlog which covers B2B technology news, mainly on the enterprise side. This week was great. One of my personal highlights, was that I went to VMware headquarters, which is my ex-company, and I sat down with VMware's CIO, Jason Conneaut, on camera. It was a great talk around economics of technology, the current economic situation, the multi-cloud. We also talked about the leadership qualities of tech leaders in tech and non-tech companies. Also this week I had dinner with Nick Brackney of Dell Tech. He's a great dude all around. We talked in deep tech, life in general, travel stories, and so forth. It was great. A couple of hours spent with him in San Ramon this week. A bunch of tech earnings, some key players: Broadcom, VMware, PagerDuty, HPE, HPQ, Box, Salesforce, Okta, C3AI, CrowdStrike, Pure Storage. These are a few. Actually, I have notes around. With that said, let's get started. Before we get started this week, I want to state why I include the earnings in this sort of tech vlog. I think our earnings are a good proxy of any technology vendors' innovation, if they are getting traction or they are just in the lull stage, or how the market perceives them. In the earnings context, we can talk about some of the announcements and some of the mentions of new platforms or how their different segments of the business are doing. So it directly correlates to the likes of CIOs and CTOs who are trying to procure these technologies and see who is buying these technologies at how much pace, and if it's going up or down, or it's just flattening out, if you will. So with that said, on Tuesday there was a slew of earnings. HPE reported, HPQ reported, Box reported. Let's start with HPE. HPE actually went down 8% in after hours. They missed on revenue. The EPS was a beat. Profit was 4 cents above estimate. Compute is a big part of their portfolio, and they had a big miss on compute. They earned $2.76 billion, where the estimate was $3.22 billion. Another big segment HPE has is the high performance computing, HPC, what we call it. There were quite a few discussions around this on Tuesday on CNBC and Bloomberg and all other circles. My take is that their high performance computing is very much well entrenched into like scientific research and or academia. Big universities buy their supercomputers. They tend to mix less with the industry use of supercomputing or high performance computing. In this case, for example, the likes of OpenAI, they're not using HPE high performance computing, right? So they're going somewhere else. So I believe they have a blind spot there. They had good proximity to Silicon Valley when they were headquartered here. Regardless where they're headquartered, they need to tap into these new breed of startups, maybe new messaging, new go-to-market strategy, serve their portfolio through cloud providers. There has to be some change there for their high performance computing to take advantage of the rise in the AI, if you will. So my 2 cents there. And Box beat on revenue and EPS both. Gross margin was 77.9% as compared to 67% market was estimating. Box CEO Aaron Levie said AI will be a tailwind for them. I can understand that to a certain extent because they serve SMB market a lot, and then a lot of documents and spreadsheets and that kind of stuff is sitting in Box, and a lot of their customers would want to unleash AI on top of their existing documents, spreadsheets, assets, data. So makes sense to some certain extent. It will, I think, greatly depend upon how they expose their portals and APIs for customers to take advantage of AI. PQ, which is consumer-facing segment of HP, when it broke up, they missed on revenue. They did a beat on EPS. Shares were down a little bit, 1% after hours on Tuesday. The big miss was on the personal computing side. They expect second half to be better. on the personal computing side. Biggest story on Tuesday was that Nvidia crossed $1 trillion in market cap. That was huge. Who knew that this company, which have had like about 100 billion market cap only like 5-6 years back, will be this big this soon? Thanks to AI boom and their very clever and in many ways revolutionary computing mechanism, where they let you program the compute through GPUs so that you can make those cores efficient for whatever you're doing. In this case, we're doing a lot of AI, especially in the training, on the training side of things. And Nvidia CEO has done maybe 100 sort of keynotes virtually on stage in last 50 days or so. He's everywhere, right? He has done few big keynotes with Microsoft, MS Build, with Dell, and even at IBM. So he is pushing GPUs to everybody. He's telling how revolutionary this technology is, and he talks about metaverse, and he talks about all kind of use cases for GPUs. Well respected, funny at times. He's a good guy.
谢谢. You're supposed to say 哪里? Oh, Janine doesn't speak Chinese.
Here are some snippets from Tuesday. Actually, he was presenting at the Computex keynote in Taiwan. He is originally from Taiwan. I think he was 3 or 4 years old when he moved to the US. Great story. He said many times that for about 25 years, 99% of the crowd was right. He thinks he belongs to 1%, which kept on telling the market that this way of doing computing is better, where you can break a computing job into multiple chunks and solve the problem and put it together and then present the result. And on CNBC, they showed this interesting chart of EMC. And of course, EMC was the darling during .com days. They used to provide certain kind of storage arrays, which nobody else was. So they were the only vendors, just like we have Nvidia right now. And their stock was skyrocketing, and then gradually it started going down, and then it started flattened before Dell bought them. And similar chart from Cisco as well during .com days. Because there's a need for infrastructure during such pivots in stacks, if you will, big shifts the way we do things. Some vendors happen to be at the right place at the right time, and they reap the benefit of that. And then of course, after some time, the demand plateaus, and then you go into this less growth stage, if you will. There was another chart CNBC was showing where in the early stage, they showed that in the early stage of the paradigm shift, hardware gets most of the money. They make a lot more money, the infrastructure people, if you will, pure hardware. And then the platform, and then the applications. Look at this chart. It's very telling, actually. It was shown on CNBC that how that those waves go. Who makes money when? Different types of vendors make a lot of money in different phases of a 8 to 12 year long phenomena, if you will, in tech. That was Tuesday. Wednesday was super busy as well. Bunch of key tech earnings with very visible names. The first one was Salesforce, then Okta, C3AI, CrowdStrike, Pure Storage, and a few others. Salesforce was down 5% after hours. They did beat on top and bottom line, but their growth projections spooked investors. They also did a beat on their operating margin, which is at 27%. Okta was down 10% after hours. EPS was 30 cents versus 22 expected, and revenue beat 518 versus 510 expected. C3I, a Tom Siebel company, was down 13%. They did a beat on top and bottom. They lost 13 cents versus 17 cents expected. Revenue beat was 72.4 million versus 71.3 million expected. Their guidance was light. They started their company as a pre-trained AI model marketplace, where you can get the pre-trained models for different types of sort of use cases, fraud detection, customer service enhancement, and so forth, right? They are pivoting in that pivot is slower than what market expects, I believe. They have AI in their name, and the stock was up big time year to date, but after the earnings, they dropped pretty significantly. Another thing about C3AI is that it's heavily shorter stock as well, so that plays into that as well. My take on C3AI is that it's interesting stock. They are in the right domain. I hope that they will be able to help the enterprises weave in the models into the large language models, and their AI model marketplace gains traction. We need independent marketplaces which are independent of big cloud service providers, but nothing stays independent forever, right? So there's that. And CrowdStrike did a beat on top and bottom line. EPS was 57 cents versus 51. They did a revenue beat as well. Stock fell 11% after hours. Guidance was good, but not great. So it's always choice of words. Many times these stocks like move big time based upon what sort of comes out of the mouth of CFO or CEO during that day. But sometimes they recover next day. Pure Storage, a high performance storage company, they did great. The stock popped 8% after hours. Revenue topped expectations. Pure Storage CEO was talking to John Ford on CNBC, and he said this very interesting thing.
The majority of data today that most customers have is cold data. It's there, it takes a long time to access and so forth. So as data shifts from cold to warm, it's going to drive a lot more momentum towards products such as ours.
As data becomes warm from cold for AI use, they are benefiting from that. That was Wednesday. On Thursday, Broadcom, the ticker symbol is AVGO, Avago. A little twisty thing about Broadcom and their ticker symbol. The ticker symbol is AVGO. What happened was Avago bought Broadcom and adopted their name as their main company name. Interesting stuff, right? Broadcom actually did a top and bottom beat. EPS was 10.32 versus 10.08, and their revenue was 8.72 billion versus 8.7 billion expected. Revenue was around expectations, but they did a beat on EPS. The guidance was not good or bad. They said, oh, our previous guidance stays, if you will. So that the stock didn't move much. It was up 1%, then it went down 1% after hours, and it just stayed in that sort of range. As you all know, that Broadcom and VMware deal is in play, and then it has not closed yet. It's going through its review from regulators. I hope it gets approved. I think it's a good deal. Because of that, these two companies report on the same day. So VMware also reported, and here are those numbers. VMware dipped a lot below their price, what Broadcom is going to pay them. So that was interesting, actually. Dave Vellante mentioned that in one of his talks, that VMware stock is there at a discount. So that was that, VMware and Broadcom. PagerDuty, another ops automation tooling company, did 20 cents versus 9 cents expected. The revenue was 103 million as expected. The stock was down 18% after hours, again because of the guidance. MongoDB, Dave Vallante's favorite stock. It's a great stock, I believe. It's a DB which sits on top of cloud providers. They did great, actually. They were up 15% on Thursday after earnings. They did EPS of 56 cents versus 19 cents expected. Look at that, 56 versus 19. That's a big beat. Revenue was 368 million versus 347 expected. So after hours on Thursday, MongoDB was up around 15-16%. But next day, which is Friday, they were up 28%. But for the whole week, MongoDB was up 37%. Their main database, Atlas, grew 40% year over year. And they are close to 1 billion in ARR on the Atlas product alone. Another interesting thing MongoDB CEO said while talking to John Ford on CNBC was that
there's a one-to-one correlation between growth and utilization. So we don't see the phenomenon that other companies do about optimizations where people are starting to wonder, do I need to put all my data in a data warehouse? Do I need to run those reports every week? How much value are they providing? There's truly a one-to-one correlation between price to value with MongoDB.
And a rise of AI-driven or AI-based applications out there as well. They are benefiting from that too. A few other miscellaneous comments and news. John Chamber was on CNBC. He said that this AI wave will be bigger than internet. He said during the dot-com days or internet era, if you didn't have the internet strategy, investors left you. And he said same thing will happen in this time. So if you don't have AI strategy, investors will look down upon you, which makes sense. He also mentioned this interesting stat.
When you look at the top 6 stocks in the NASDAQ, say, as an example, I think they've accounted for 80% of the growth of 3.5 trillion in the NASDAQ move so far.
In other news, OpenAI, the company which produced ChatGPT, published another research paper about stopping or preventing hallucinations in models. The current way of stopping hallucination in models is that people are sitting there and saying, this answer is good, this is bad, this is good, this is bad, and it's going into a vector database, which when you do the inference, you read against that. It's like putting a where clause in SQL and saying that don't pick up these results, pick up these. So it's a kind of poor way of training AI. It's like after training, you're trying to retrofit it to your needs or your likings. But they published a new research paper. I'll put the link in the show notes. In this bonus segment, I want to mention a tweet thread. So there's a lot going on Twitter all the time. If you want to follow me and my buddies who discuss the B2B tech all the time in public, if you will, on Twitter, you can follow us. One thread was going there that was of the power usage or the carbon footprint of AI. A lot of people start focusing on the carbon footprint or the inefficiencies in the system early on in an innovation cycle. What I have learned by living here in Silicon Valley for the last 27, 28 years is that if you start focusing on the efficiencies of the input, certain ingredients early on in the cycle, you cannot innovate. So I'm not downplaying the need for being environmentally friendly and all that, but if we don't work on inefficient chips, inefficient systems up front, how can we make efficient systems later? So it's part of the journey. We have to go through higher wastage before we can get to the more leaner, meaner, and more environmentally friendlier products. It's not that we are doing more damage to the environment. The whole idea behind all the innovations is so that we can do more things with the fewer means, if you will. So, for example, we used to operate the coal-based, steam engines, but we don't now. We have diesel, we have other electric trains now. And on that note, the fusion-based electricity production has a huge promise, and it's a lot more environment friendly. Microsoft has signed a deal with Sam Altman's company, which I covered in my last vlog, to buy the power from him in 2028. I usually say that the whole idea behind when you're innovating, you have to look for the convergence of things. Not only the convergence of things right now, but convergence of things in the future. So in future, power will be cheaper. You can burn through more power right now. So because you're going into the future, the power will be cheaper. That means these solutions will be cheaper. And of course, these cores and these microprocessor technologies will be getting better as well. So those are my 2 cents. Like when you're building something, you want to build for the future. You want to see what other factors will converge, and you want to build products keeping those things in mind. With that said, thanks for listening, and I will see you next week.
Grace Hopper. Like that. 谢谢. You're supposed to say Nani. Oh, Janine doesn't speak Chinese. AI. So I'm gonna hire AI next time. Kind of hard for me to tell from here. Are you guys with me? Hi, am I alone?
I am here at computers. I will make you like me first. Yeah, sing it with me. I really
This is the part.
like Nvidia.
All right. Very good. Good job.